When it comes to investing in silver bullion, there isn't just one way to approach it. Different investors use different strategies depending on their goals, risk tolerance, and how actively they want to manage their portfolio. Let's break down the three main approaches people use so you can see which one might fit your own style. But before doing that, remember to go to vanstarmining.com/silverchoice to discover my favorite and most trusted option for investing in silver bullion. You may be surprised which one I personally recommend. The first strategy is what I call the long-term hold. This is where you buy silver bars or coins and essentially hold them for decades. The idea is simple. You're stacking physical silver as a store of wealth, protecting your purchasing power over time, and hedging against things like inflation or economic uncertainty. The big advantage here is that it's low stress. You're not constantly watching prices, you don't have to worry about short-term market fluctuations, and silver has historically retained its intrinsic value over the long term. But, of course, there are trade-offs. Your money is tied up, so you won't be able to use it elsewhere, and you'll need to consider storage and insurance costs, especially if you're holding significant amounts. This approach is really best for someone whose main goal is long-term wealth preservation and who isn't interested in frequent buying or selling. The second strategy is what I call tactical allocation. This is where silver is a part of a broader investment portfolio. Typically, investors will allocate anywhere from 5 to 15% of their overall assets to silver, often alongside gold, stocks, bonds, and other investments. The idea here is diversification. By including silver, you reduce the overall risk of your portfolio because precious metals often behave differently than traditional assets. The flexibility is great too. You can adjust your allocation depending on market conditions. The downside is that it requires more attention than a long-term hold. You need to monitor your portfolio periodically, and the returns on silver might lag behind equities during a strong bull market. So this strategy is ideal for investors who already have a diversified portfolio and want to add silver as a hedge or stabilizer rather than their main investment. The third approach is short-term trading. This is for investors who are looking to take advantage of price movements in the silver market. It involves buying and selling bullion more actively to capture short-term gains. The main benefit here is the potential for higher returns if you can time the market well and react to trends. But as you might imagine, this is also the riskiest approach. Silver is volatile, and frequent trading can eat into profits because of premiums, fees, and the difficulty of predicting short-term swings. This approach is really best for experienced investors who have the time, knowledge, and appetite for active market management. It's not for someone who wants a set-it-and-forget-it investment. So, in summary, each strategy has its place. Long-term hold is about preservation and simplicity. Tactical allocation is about balance and diversification. Short-term trading is about opportunity and active engagement, but with higher risk. There's no one-size-fits-all solution, and many investors actually use a combination, a solid base of long-term holdings, a portion allocated tactically within a portfolio, and maybe a small amount reserved for short-term opportunities if they're comfortable with it. The key is understanding your goals, your risk tolerance, and how much time and effort you're willing to put into managing your silver investment. Now that we've gone through the main strategies people use to invest in silver bullion, let's talk about some key rules and the mindset you'll want to adopt if you're serious about this kind of investment. First and foremost, think long-term. Even if you're using a tactical allocation or experimenting with short-term trading, the reality is that silver is a long-term store of value. Prices fluctuate, sometimes dramatically, in the short term. So it's important not to panic when the market dips, and not to get overly excited during spikes. The investors who do best are the ones who stay disciplined and stick to their plan. Another critical point is liquidity. Before you buy, make sure you understand how easy it will be to sell your silver if you need to access cash. Some coins and bars are highly liquid and easy to sell quickly, while others, especially rare or specialty pieces, can take longer to move. If you're investing a significant amount, this can make a big difference. You also want to pay attention to premiums. That's the extra cost you pay above the spot price when buying bullion. Premiums vary depending on the type of coin or bar, the dealer, and even market demand. Overpaying for a piece can eat into your long-term returns, so do your homework and compare options before buying. Storage and security are just as important as the purchase itself. If you're holding large amounts of silver, consider secure vault storage or an IRA-approved custodian rather than keeping everything at home. And if you do store some at home, make sure it's insured. Theft, fire, or loss is a real risk, and protecting your investment is part of being a serious investor. Another mindset rule is to avoid chasing hype. Silver prices spike in the news all the time, and you'll see a lot of hot tips online about which coins to buy. Stick to your strategy rather than reacting emotionally to headlines. Investing in bullion isn't about making a quick buck. It's about protecting and growing your wealth over time. Finally, be willing to educate yourself continuously. Even experienced investors learn something new every year about market trends, storage solutions, IRA rules, or emerging bullion products. The more you know, the more confident your decisions will be, and the more you'll be able to spot good opportunities while avoiding pitfalls. So, to sum it up, stay disciplined, understand liquidity and premiums, store your silver safely, avoid hype, and keep learning. If you adopt this mindset, you'll be in a much stronger position to execute any of the strategies we talked about earlier, whether you're stacking long-term, allocating tactically, or exploring short-term trades. All right, now that we've covered the strategies and the mindset you need, let's get practical and talk about a step-by-step approach you can actually follow if you want to start investing in silver bullion seriously. This is the part where strategy meets action. The first step is to define your goal. Ask yourself, am I investing for long-term wealth preservation, for portfolio diversification, or am I looking to take advantage of market opportunities in the short term? Your goal will shape every other decision you make, from the types of silver you buy to how you store it and even which dealers or IRA providers you work with. Step 2 is to choose the type of silver and the allocation. Decide if you want coins, bars, or a mix. Think about purity and quality, and how each piece fits into your overall strategy. Then determine what portion of your portfolio you want in silver. For most investors using a tactical allocation, this might be anywhere from 5 to 15%, but it could be more or less depending on your goals and risk tolerance. Step 3 is to select a trusted dealer or IRA custodian. Look for firms with strong reputations, transparent pricing, secure storage options, and experience handling silver bullion for investors. This is also the step where you consider whether you're buying for personal ownership or through a self-directed IRA. Either way, make sure you're working with a provider that you can trust completely. Step 4 is plan your purchases and timing. Decide if you're going to buy in a lump sum, gradually over time through dollar cost averaging, or opportunistically when the market dips. For long-term holders, buying in stages can help smooth out price volatility. For tactical investors or short-term traders, timing and market monitoring become more important. Step 5 is secure storage and insurance. If you're buying personally, invest in a safe at home or consider a bank or private vault. If you're using an IRA, the custodian typically handles secure storage for you, but always confirm insurance coverage and protection against theft, fire, or loss. Step 6 is to monitor and review your strategy periodically. Silver bullion isn't a set-it-and-forget-it asset if you're serious about results. Check your allocation at least once or twice a year, review market conditions, and adjust your plan if necessary. That doesn't mean reacting to every headline, but staying informed so your strategy remains aligned with your goals. Finally, step 7 is to stay disciplined and patient. Investments in silver are long-term plays for wealth preservation and diversification. The gains may not always be flashy, but with the right approach, consistency, and mindset, you can build a solid foundation that protects and grows your wealth over time. So, to recap, start with a clear goal, choose the right type and allocation, work with trusted dealers or IRA custodians, plan your purchases, secure your silver properly, monitor your portfolio, and stay disciplined. Follow these steps, and you'll be executing a silver bullion investment strategy that's thoughtful, informed, and built for long-term success. I hope this video was helpful, and don't forget to go to vanstarmining.com/silverchoice to discover our favorite and most trusted option for investing in silver bullion.